everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here with another episode to unfold the domestic global factors and let's understand what's the impact on several currency pairs. First and foremost, let's talk about the Fed, the FOMC, which happened for the month of March. So obviously, as expected, it was status quo, nothing on rates. But important point to watch out was the dot plots, where the dot plots still suggest that three cuts for the year 2024. And then for 2025, it was earlier projected as four cuts, which have dropped to three cuts. And for 2026, again, three rate cuts. Also, it's important to note that the GDP number revision is also done from 1.4% to 2.1%, while inflation forecast, that is the core inflation, has also been revised higher from 2.4% to 2.6%. So overall, somewhere it was kind of a dovish statement or a dovish stance because even if we see the Powell speech or the testimony earlier, it was quite evident that they were focused on inflation. They were remaining concerned about inflation trajectory. The CPI number which came out was hotter than expected at 3.2% versus 3.1%. Labor market has been mixed, though it's been stronger, but I can still say it was mixed according to me. If we break down into wages, average hourly earnings, also unemployment claims, NFP. So I think it was a mixed data from the US perspective. And even the speech, Powell was very clear about the fact that they don't want to be indecisive. Basically, if in case whenever they are moving towards rate cut, they want to be clear about the trajectory moving ahead. They don't want to have an indecisiveness that once they start rate cut and they are not sure of is it the right way or is it too fast to start to do so. So they were very clear about that aspect. And if we see the Brent crude price on the other hand, they have started bouncing back towards $87 per barrel. So it acts like a slow poison when it comes to INR, where obviously we're seeing levels above 83 already, on above 83 figure already there on charts. So all in all, one focus should be Brent crude prices, that if it breaks $90 per barrel, that can pose a risk from the INR perspective, because we are somewhere again coming towards the all-time high levels. Also, if we talk about the FPI flows from the domestic perspective, they have been good. For the year 2024, for equities, it's around 16,000 crores. For debt, it is around 53,000 crores. And if we combine the hybrid funds also, for the year 2024, it's around 75,000 crores of inflows. While on the other side, the same inflows have been absorbed by RBI and the spot purchases, which have been seen from the bulletin as well, where the forward book, the net outstanding forward book stands at around $9.97 billion as on 31st Jan 2024. And even the outstanding gross purchases were at around $10.45 billion and the gross sales were around $8.4 billion. Net around $2 billion of net purchases were done by RBI as on the January month 2024. Also, FX reserves we see at coming near all-time highs. It's currently trading around $636 billion. The all-time high of $645 billion is not too far. Personally, if you ask me, I am eyeing these to break $650 per $650 billion mark as well very soon. The way inflows have been attractive and the way RBI has been absorbing these flows, it's not too far to cross that $650 billion mark as well. But the best part is, it has bounced from the lows of $525 billion in October 2022 to these levels, which is more than $100 billion of jump straight away. For dollar rupee, yes, there have been quite volatile sessions, though we have been always saying that, the volatility has gone lower. But in last couple of sessions, we have seen rupee moving towards 82.65 also, and then it moving towards 83.15 also. So it's a decent volatility in last couple of days, where it gave chance to both an importer as well as an exporter to hedge some part of their exposure. We also had the Swiss National Bank, that is the SNB policy, where we saw the first rate cut today. So it's a welcome sign when it comes to the rate cut trajectory, though Fed was not the first mover in this time. But yes, with time, I think the central banks are clearly thinking about those perspectives where the rate cut trajectory may start soon. For RBI perspective, I believe rate cuts may start in August, not before that, and maybe with a slower pace, where monsoons will also be a point in consideration apart from the global sentiments. For dollar rupee, we continue to expect it to be in a narrow range, where 80 to 65 was one of numbers which we've seen, but 80 to 80 acts as the immediate support once again, with 83.35, which is the near all-time highs, acting as a resistance. For exporters, these are decent levels to hedge some kind of exposure to around 30 to 40% of their exposure, and just wait if it further breaks below 80 to 80 or no. In case if we are able to sustain around these levels and breaking the all-time highs, then obviously we can remain open for some more time. While for importers, we need to wait for the opportunity where the market has been kind to give those pushing back below 83 levels. Some kind of exposure definitely needs to be hedged there because of also the lower for premiums, which may not remain lower for some more time from going ahead, because premiums may possibly bounce from your from around 1 year standing at 1.65%. So it can definitely see a bounce because the interest rate differentials may not remain constant. So that's all from my side, friends. Thank you so much and hope you find this session valuable. Thank you.